Investors will look over a full plate of economic reports this week, capped off by the May jobs report that is due out Friday morning. Joining us now, Chief Economist Anthony Chan. Always good to see you, Anthony.
Great to be here.
Let's talk about the jobs report. It's always the big headline number for the week, if not the entire month. What are you looking for
It really is. I'm looking for a number of about 200,000. I look for the unemployment rate to stay unchanged at 4.4%, and I look for wages to start to creeping up a little bit higher, maybe 2.6% year over year. We, in fact, got a little bit of a hint when you looked at the employment cost index in the first quarter, going up 2.4% compared to the prior quarter of 2.2%. So wages with this tight labor market are probably going to creep up a little bit higher.
You know, we're going to get a look at personal income and spending for the month of April today. Are you bullish about the number? And I say that because we really haven't seen job growth like we'd like to see over the past 3 months, despite the fact that we're getting new policies put in place to encourage American investment.
Well, I really am.
And job
I'm looking for personal income to go up somewhere in the neighborhood of about 0.5, 0.6%, and spending to be up about 0.4%. That will tell you that in the second quarter, consumer spending will be a lot stronger than what we saw in the first quarter.
Which would go to your theory that usually the first quarter weak economic growth is more of a seasonal factor. So how bullish are you on the second quarter being a lot stronger?
I'm looking for about 2.5 to 2.75% growth in the second quarter, and then you're going to see something similar to that in the remaining quarters of the year.
How concerned are you about international tensions right now and the market's effect? I mean, you know, we had obviously the bombing in Manchester. You've got more tensions with North Korea now, another missile fire, ballistic test missile. I mean, at what point do investors actually start to react a little faster, if you will, with a little more intensity to what we're seeing in the global picture?
Well, historically,
with terrorism,
I've even done studies looking at what happens when you have these major terrorist attacks, either internationally or domestically. And what I find is 3 months, 6 months, even a year later, the market is much higher. So over the near term, you will see the markets pausing, but over long periods of time, the market does end up recovering.
With terrorism, we've seen that investors show somewhat of a sense of resilience, but North Korea now firing their third missile in just 3 weeks' time, 9 this year. Is an escalation of the tensions with North Korea, is that different? Will investors respond to that differently?
Oh, of course they will, because obviously with threats of North Korea versus South Korea, with us having 28,500 U.S. soldiers there, it's not just an important ally, but it's our actual soldiers that are at risk, and that will certainly have an influence on financial markets.
Real quick before we go, I got to ask you, 3% GDP. You think we can make it? There's a lot of folks that think that is unrealistic.
I don't think 3% this year is a number. I'm looking for about 2.2% this year and 2.5% next year. Okay. For me, the important thing is that we are seeing incremental growth, not necessarily hitting that 3%.
But that 3% is a big
in 2019
number.
Not 2019 is a big question. I keep that as a big question.
I got it. Anthony Chan, so good to see you. Thank you.